our listeners reached out and even called or texted asking why we haven't recorded in a while. And here we are with a fresh episode and an assurance that we will release a new episode with deeper insights from the market experts. And today we have Harish. Harish has been kind, sharing his views with all of you. Harish, welcome to the show. How have you been?
I'm doing great. I'm doing great, and I'm very excited about getting started, recording again.
Welcome. Harish, a lot of people really ask me why we haven't recorded. You want to share what's been keeping you busy? What's really going on? How's your schedule looking these days?
No, I think there's a lot of exciting things going on. We are nearly in the final stages of wrapping up our beta on the Android Vantage side of things. And, the journey has been very exciting. We have been listening to our customers in respect to the kind of feedback they are giving us. They've been looking into the application on a day-to-day basis, whether it's been the onboarding experience, the trading experience. So we've been refining the, app and the client journey. We are also now working on, getting an office in Abu Dhabi. From a Middle East and North Africa accessibility perspective, it's a brilliantly growing market, and we want to participate in the growth that's happening. So yeah, these two things in general, which are really taking away 120% of our time.
Absolutely, it's a big undertaking, and congratulations on the MENA setup. It's definitely a booming market and right place, right time. That's all I would say at this point. So I know you have been a big promoter of artificial intelligence. We've spoken about this previously in the other podcast series. Anything new that you're reading about? Any exciting, interesting projects that you've been working around or following? Please share some insights with us.
Yeah, as in, listen, there cannot be a single episode without talking about AI. I think AI will remain an area of interest in most of our episodes. I think the one reality that does not change, whether you talk about AI every day or you're going to talk about it once a week or you're going to talk about it once a quarter, the reality of AI is that it's here to stay, and it is going to absolutely disrupt and change everything that we do today across all industries and across every type of workflow within each of these industries. What's really been an area of interest for us is how is AI being distributed or made accessible to the end consumer. This is something Nilesh spoke about in the two-part series that we did with him, where he spoke about the evolution of AI. The fact that there was this huge path-breaking phase, and now the phase that we're entering is adaptation, and adaptation is going to be an area that we are keeping an eye on.
Oh, lovely. This is great. And when we talk about AI, there's one stock that very specifically that keeps coming to my mind every time, and I've been tracking it for a very long time, which is Nvidia, right? Because of the chip demand going up, the stock hit a lifetime high. Then there was a corporate action. Again, the stock started rising. The results, probably there was a mixed bag. A lot of people expected better results. The stock definitely took a hit, right? But what's your take on Nvidia's future? Like, how do you see that panning out?
Yeah, so listen, I may not necessarily ever talk about a particular stock, as in I'm going to leave it to the experts. So we'll invite Sunil Garg, who's our group CIO, and in my opinion, he is an absolute genius when it comes to tracking the stock markets around the world, whether it is looking through macro data and then really connecting the dots in respect to why a certain stock performed the way it did. In my opinion, I think when you talk about AI and chip makers, I think there are two sides of the coin, and both are absolutely disrupting, right? So when you look at the chip demand in general, and including what we heard in the Nvidia quarterly result, was that there is demand.
Sure.
There is lack of supply, and maybe that's really what happen in the NVIDIA situation, but I feel the demand is there. The demand is obviously also originating from the top, tech companies, and we don't necessarily see the demand, fading away in the coming quarters. The other side of the conversation, in my opinion, which is more exciting, has been the evolution of micro models in AI that you and me could run on our phone, you and me could run it literally on the laptop.
Sure.
And in my opinion, that's an area that I'm super excited about, because what it does is it takes away this whole conversation of compute at a small and a medium use case basis, whether these are end users who really want to train a model very specific to their day-to-day and very specific to their data set. It could be small enterprises and medium enterprises.
Yeah.
And as these models are integrated into our day-to-day, into those use cases, you will have, the chip demand completely looked at from a very different aspect. So that's an area that I'm very super excited about. That's an area that Advantage is obviously looking at is, is there a way we don't have to use, cloud compute in the way we are using today? And in my opinion, that's also an area that hundreds and thousands of businesses out there are contemplating as we speak. And I think, again, they are two sides of the same coin. And then I'm super excited to see how this space is going to evolve in coming quarters.
No, you very interestingly put, right? So there are these big players who need enough and more space, compute power, etc., to build all these models, while there are these microservices or micro components that are available for smaller use cases, smaller players, which technically allows everybody to participate in the AI journey and explore the use cases that they wish to. We're definitely excited to see how this pans out. But are you in favor of the microservices being offered, or are you still on the fence and you would want to see how it pans out in the future?
I think it's horses for courses, right? So in my opinion, what's going to happen is you're going to have, companies like us who will explore both, the high compute. We have high compute use cases, and I feel we are also having use cases where we could just set up a local server. The server could be, a laptop or, a small tech stack sitting in one of our offices.
Yeah.
I feel there are going to be enterprises who just need to adopt a small model, install it in one of their smaller servers and just run it. I feel those use cases are on the rise, especially because the use cases for certain businesses is not that complex, and they have data that they want to train their models on, right? And that data set is also not very large. It's basically consumer orders that they have over the last 10 or 15 years, and that data can be fed into those models, and those models can be optimized for their workflow. So in my opinion, that's an area to watch for.
Oh, great. And I was chatting with someone, and there's definitely a mixed bag of sorts, right? Of investors. There are few believers who still feel that the bull run will continue. There are few who are a little skeptical and feeling that the steam is almost over. Is there a particular trend that you're following these days? What's your view? I do understand that you do not want to comment on the individual securities, but market in general, have you formed a view, or which side of the school are you sitting at today?
No, I think, one of the elements, and I think I spoke about it in in one of my insights that I'm sharing, on different platforms, be it LinkedIn or be it other social media platforms. As in one of the graphs that, I presented in one of these daily insights is a very interesting graph. And again, we should definitely quiz Sunil on it, is the expectation of a rate cut and the implication it has on smaller enterprises that are sitting on debt. And what it basically does is all of a sudden makes those smaller and medium enterprises and their stocks very attractive, and therefore, um, and they're attractive because, as soon as the Fed rate cut is done, the debt, the liability on those companies all of a sudden become, reasonable, and the kind of returns that they're giving against their stock is going to be different than what it is today in a positive way. So those are the kind of trends that we are watching, and we are trying to connect a macro event into the stock prices of certain segments, and then advising to our clients to take allocation in some of those companies. So yeah, as in that's really the interesting area that we are watching for, at least for the next quarter or so, as the Fed rate cut is going to become a reality.
Lovely. No, thank you for sharing those insights. And while you were talking about your LinkedIn post, I've been following some of the LinkedIn posts that you've been posting recently. And after the show, I'll definitely ask you how are you finding the time from your busy schedules. But to be very honest with you, I fell in love with the article that you wrote on luxury, lifestyle, and wealth management. Right, the pictures. I'm sure you were like in a very exclusive store which had handpicked collection of all these fancy brands. So, and what I really want you to focus on today, Harish, is how do you maintain, or how does one maintain a balance between wealth management, luxury, and lifestyle, right? How do you correlate all these three aspects together?
In my opinion, luxury and wealth are coupled with each other, and in so many sense they are not coupled with each other, right? So let's start with the second conversation. I think if you look at the consumer spend today, consumers want access to luxury products, whether they're watches, bags, or any other form of items that they want to consume on a day-to-day basis, and that may or may not have a correlation with their general net worth or the kind of wealth they've accumulated, in their journey so far. But then I think the client segment that we are dealing with, the aggregated investors or the professional investors, as we call them, there is a clear correlation in respect to the way wealth has been planned and some of the expenditures correlated with it. So a lot of our clients, reach out to us for 1 year, 2 year, 5 year wealth planning, and some of them reach out to us for a 10-year horizon.
Sure.
And as we plan the wealth, and if a lot of good time is spent in planning and executing that journey for them, the expenses, and if those expenses have to be allocated back to some of their luxury vision, then it becomes a very straightforward conversation, and it's correlated or commingled with the way the wealth was planned. So, that's one aspect. The other aspect is luxury items don't necessarily have to be always, watches and bags. Obviously, I was visiting one of my, clients, store in Dubai, and, that's really where the pictures were taken. But luxury also means, buying a yacht, or buying a luxurious house which becomes a vacation home, whether it is in Ras Al Khaimah, in UAE, in Singapore, or any other part of the world.
Sure.
And what do clients do with those expenses? Clients are also reaching out to us, for example, in getting their art collection valued, or telling us that, hey, this is what I've invested in, and I want this to become part of the portfolio consolidation solution that we give them, right? Which is basically bringing investments from all around the world that the client has made. They are sitting with different brokers and custodians and banks in different parts of the world. So as we consolidate that, they also want us to consolidate a valuation of these art forms that they have been collecting. And that's also a kind of a luxury, expenses, right? So it's a very interesting space for me, especially because, I'm somebody that does believe, and I have a taste for luxury too, but in my opinion, when you couple that with a client's wealth vision and you really get it right, I think, having that expense or allocation done, there is absolutely no guilt in that.
No,
In fact, it works out for clients in a very positive way, because you could end up buying the yacht you want, you could end up buying the second luxurious home you want, and see those assets appreciate over a period of time, or make a second income, by renting them out.
no, perfect. And I think you said it very well, that the client has to be in the center, and then everything else revolves around that.
Yeah,
Right. So
absolutely.
I think that is perfect, right? And so, any fancy investments you made very, very recently?
You saw the pictures. I think I'm a kind of guy who could literally buy every bag from that collection. So, I really stopped myself from doing that this time around. I think last time I did end up buying a Mont Blanc cabin bag, but with Ferrari wheels, and that's really the kind of collection this client has. And we not only those collections are not only accessible to me, but other clients of mine. So we obviously try to ensure that we are referring clients back into to other clients, and ensuring that everybody benefits out of the community that we are creating at Adroid, amongst the clients and us. But yeah, that's an investment I made, and I'm very proud of it.
Lovely. I would love to see that bag one day.
You should.
For sure.
You should. It's a fancy bag.
For sure. Great. And so you talk about there has been a lot of focus on wealth inclusivity, right? And clients specifically, right? So, and I know there's a focus on accredited investors specifically. What does accredited investor really mean to a layman person? There are a lot of definitions, right? But if you have to explain it to somebody in simple terms, what does it really mean, though?
Yeah, as in, it means different to different markets, I would say. But accredited investors in general mean sophisticated or professional clients, clients who are well versed with the investment world, so to say. They have a decent understanding of vanilla asset classes all the way to a complex asset class or the private markets, whether they're VC debt funds, complex hedge funds, structured derivatives, or model portfolios which are structured for this clientele. Normally, a lot of markets will define such clients basis the size of their investments or wealth. So, for us, these are clients who are investing upwards of $100,000 on the platform, but generally, speaking, have investments which add up to about $1 million Sing dollars, or a net worth of $2 million Sing dollars. People who make upwards of 300,000 Sing dollars annually. So those are the kinds of buckets. You don't have to do all three, by the way.
Anyone.
You could basically be any one of them. And these clients basically on our platform start with $100,000 upwards, and it just allows us to structure a portfolio which is well balanced between listed and the private products.
Yeah. So I think the focus will be that wealth management technically becomes accessible and very, very inclusive to all in its true sense, given the definition that you've just given.
Yeah, I think accessibility is very important, because what happens in markets, certain markets, especially capital control markets, is that clients, wealth or investments are locked into that market, and then these clients are offered very fancy credit cards and a lot of benefits that come with them, but then the asset allocation mostly is limited to mutual funds and ETFs or stocks within those markets. And like it or not, mutual funds are buying the same stocks from that particular market, and so are the underlying ETFs. So the idea of our platform really is to ensure that clients get access to global markets. I think as of today we have about 30 plus markets that the clients can really take allocation from, and then not only get asset allocation in listed instruments, but also like go all the way to bonds, single line bonds or bond baskets that we have access to, and then structured derivatives? Can we make certain hedge funds accessible to these clients? Or can they like invest in a hedge fund as low as $100,000? As in, those are the kind of ideas that we are offering to our clients, and just listening to them in respect to what kind of vision do they have about their wealth, and then really getting to the asset allocation that works best for them.
Well, perfect. This is good. While we'll continue our discussions on wealth management, on different kind of products and some interesting things and projects that you're working on, I know you were a very active golfer, but your schedules have been very, very haphazard recently because of MENA coming up and a lot of travel that you had to do. Did you manage to slide in a visit to the course, get a game, probably a 9-hole, if not an 18 recently? Well, how was the game?
As in, I'm not playing as many games as I used to. My handicap is horrible. Not that it's going to change anytime sooner, I feel. But I think, I love the game. And, at the moment, instead of playing too many games and spending time on the greens, what I'm really doing is spending time in the range and, hitting more balls and, trying to really, close the gap in respect to, what my caddy and, my coach have identified. I'm also spending more time in the gym, trying to really ensure that, physically I'm able to play the game, especially whether it is flexibility or some of the back issues that, we identified that were impacting, my swing and, things like that. I'm also focusing on the shorter version of the shorter part of the game. So I'm taking like 2 to 3 shots really to get to the greens. And these 2 or 3 shots, make me cover, anywhere between 200 yards to 400 yards. But my final 25 to 50 yards is taking exactly the same number of shots.
Yeah.
So on a par 5, I'm like hitting maybe 8 shots, and that's a horrible part of my game. So I've been putting a lot. I'm really trying to, work with my coach to see how can I really improve the shorter version of the game or my game, and then really bring the score down. And one of the things I really realized is that when you're playing the longer, the long shots, and then when you come on the putting greens, the mental and the physical requirements are very different. So the core has to be really worked on. The back has to be worked on so that you're more stable when you're, when you're putting. So that's what I'm doing. I think, I wish I could play more games, but I just have to improve my handicap at the moment.
First of all, I hope you recover very, very quickly from your back injury, right? And you're spot on, right? A lot of focus in the initial stages when you pick up the game is on the long game, because in a way it gives you that adrenal when you're hitting those 200 yards, 250 yards drivers. But 50% of the game focus is really on your short game, right? So I think you're focusing on the right thing. And I still remember some of the previous games that we played together wherein you were hitting birdies like nobody's business, right? So like a 30 feet putt straight in.
Yeah.
I still remember those days, and I'm sure you'll be back. So wish you all the very best, and then hope to see you on the course very, very soon.
Absolutely.
And Arish, thank you so much for sharing your insights with us. And we'll continue to get you along so that you can share some more views with our listeners.
No, I think we are going to be spending more time in these weekly podcasts. We definitely want to hear from our clients and our listeners in respect to what the topics that matter to them. I think the idea really is to talk about, the weekly trend and certain things that, clients have to, keep an eye on, while I am discussing them on a daily basis, through the daily insights. So, rate cuts is something that clients have to, currently bake into their asset class allocation. It's very important.
Absolutely.
Because, this is something the market is pricing, for right now. And as, time progresses, a rate cut is on the cards anywhere between 25 bips to 200 bips. And then the other aspect is to keep an eye on is going to be on, emerging, stocks or areas. Like I said, one of the charts of the day that we discussed in the daily insight, and, you asked that question too, is, these companies that are doing well but have debt on their balance sheet, and as the rate cuts take place, some of these stock prices could have their run on the upper side. And then we are going to bring in Sunil more on the podcast. We're going to bring in more people who play better games, golf games than me.
Absolutely.
And we are committed to bring these podcasts to our listeners on a weekly basis.
No, lovely. I'll look forward to some of more interesting discussions. Like Harish said, we'll bring in a professional golfer to share a little bit more insights. Till then, stay tuned and we'll catch you in the next episode.